The whole idea of water on demand is the idea that I'm currently getting my water treated by the city. I want to do it myself. Well, why should I spend $1 million? Why don't I just sign a service contract with a private provider? And that's what's happening right now. These businesses are able to sign long-term service contracts and just pay by the gallon. And we take care of everything. Plus we have the engineers, you name it. The key here is you got to have the technology. And since 2018, we have been developing a division that is based on patented technology for miniaturizing these big water plant systems down into the corner of a brewery or whatever, right? It's got great value, all that good stuff. But we're already doing it for breweries, housing developments, for concentrated animal farms, mobile home parks, which, as you know, if you're in the mobile home park business, it's an area that really needs better wastewater treatment. Freeway rest stops, RV campgrounds, warehouses, you name it. This is an idea of what it looks like. It's all containerized, nice and neat. This is the same thing, which is called a pump station. What's great is we build them at the fabrication sites, truck them over, drop them in the ground, plug them in, and off she goes. All right, now, MWS since 2018 has blown up. In fact, since 2021, we've had more than 7 times growth. Why? Because the world is moving towards self-treatment of their water. Now, Progressive Water is our other division. We acquired it in 2015. They've been around forever. They have huge customers, most of whom we can't tell you who they are, but it's all custom. So this is really just an engineering capability. And they too have, for example, 2019 to 2022, they nearly tripled their revenue. We basically combined them all into Water on Demand Inc. Origin Clear is the largest single shareholder. We currently have more than 50% of it. And it's going to the NASDAQ. And welcome, everyone. It's the 22nd of February, and I'm very happy to have you here with us. We have a very nice attendance tonight, so thank you for joining. And we're going to get right into it. All right, briefing number 250. Yeah, baby, water is the people's asset. That remains our major differentiation. Tomorrow, I'm actually being interviewed by a major financial paper that you would recognize if I told you. And that is the work by the PR agency MPR. MPR.com is the agency that we hired on January 1st. And now their work is starting to kick in. And we are positioning ourselves as a leader in not only decentralized water, which is a space that we predicted starting in 2016, but now in water as a service. Having paid off on the decentralized water prediction, we're now developing the water as a service space. And we are unique because we're the only water as a service player that is focused on regular investors. And that's a whole story that we'll tell later in this program. All right, so as usual, we have the safe harbor statement and the disclaimer for any investment talk that we have. And speaking of disclaimers and safe harbor statements, I promised you that I would get more information about what I can discuss with the S4. I've now planned I've put together a plan on what I want to review, and I have it with legal, and I expect to be able to do that review next week. So it's a specific section of the S4, and as you know, picking out pieces of things is always very delicate. So I was working on that, and legal will give me the clearance on what exactly I can say. So that's what's going to come about. Keith Rutan says, heard about how tech and AI are going to need a lot more service platforms. Yes, big news, Keith. NVIDIA blew up. Did you see that earnings report? Crazy. And that's really because data centers are just expanding madly. They're big water users. Early on, they were doing air cooling, which is very energy intensive. The next move is to go to water. Some even go to liquid polymer, but it still has water in it, but it's a polymer type solution. Either way, the water usage is exploding in the data center space. And in fact, a close friend of ours, their kids have been students at my wife's small school here in Florida, and he is involved with a major player in the data center space, and he's telling me that it's going nuts. So I agree, there's a lot to be done there, and we do intend to follow up on that. It's a consequence of AI, which is a vast amount of microprocessor usage and data centers. All right. Let's start on my Twitter account. We're growing. We're over 1,000 followers, and I strongly recommend that you go to @RiggsEck on x.com and join me and make comments. I am actively on the platform. Just go ahead and tag me, and I will see it, and I'll be happy to get into a debate. Hey, let's get into a big, noisy debate and get all angry at each other. Why not? Let's have some fun. Anyway, don't be a troll. Otherwise, I love it. Now, the last post on the 15th was, of course, about the S4, which literally was, down to the wire, and it worked out beautifully. We exported our hard labor products and went into consumerism and debt, but we couldn't export the building and maintaining of our water infrastructure, obviously, so that has just been decaying. So time for self-reliance in water management. The story is the easy solution was to just ship everything away to China, but can't ship away your water treatment, unfortunately. This is an interesting little illustration of decentralization. And this image, which I'll open up right here, shows us a centralized system and a decentralized one. Now, this multi-point STP, that's spanning tree protocol. It is an IT term. And what it means is basically that it's a way to address all the points in a network without looping, because networks have redundant nodes in case one of them breaks down, but you don't want them constantly looping back and forth to each other. So a multi-point spanning tree protocol is a way to efficiently build a network. And that's really what a decentralized water really is, a network, isn't it? It spreads the workload out to business, industry, agriculture, and neighborhoods. Let's see what we got here. Manufacturing reshoring. So I've talked to you a lot about reshoring, which is nearshoring after offshoring. So when you offshored, you send it to China or Vietnam or whatever, and now you're nearshoring it, you're bringing it close, basically Mexico. I call that reshoring. It's in a huge boom. Look at the growth in construction. Really, it just started taking off right around 2020, the pandemic. And this is interesting because it was going downhill a lot from 2015 onward, and then it just started taking off. So this, I believe, comes directly from the supply chain problems, which basically were a big wake-up call. And these factories will require integrated energy and water. No utility can keep up. So I did post this last week, but I think it's a fascinating topic. Little thread here. What's weird is that for all the government spending, water infrastructure is badly underfunded and jobs in the water utility industry are not being filled. And of course, we also have stress from a number of factors like the border situation. This is why you need to follow me on Twitter, talking about values, business relationships, et cetera, our fast twitch approach to business, and all of that good stuff. It's fascinating. But again, never be afraid to pivot. We've learned that lesson really, really well. And continuing here. All right, let's take a look at buying a home. Oh yeah, this is an interesting one. Again, this is really very harmful to the market right now, but unfortunately, we don't see an off-ramp right now. Now, it was launched actually in the Pittsburgh area where Ken Berenger and AJ Fakej are located, also Josh Wills. And this is a story about basically $6 billion, blah, 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 investing in America. Here's the amazing part. This is a drop in the bucket. Obviously, it's a play on words, but and I'm glad that they're putting in money in the water infrastructure. The problem is, of course, that it's nothing, even though it is more than it has been. Certainly, I'm not going to throw shade on it, but nonetheless, it is a problem because it's far short of what the needs are. So you can see all the different things being invested in here. The PFAS, which is, the Teflons and so forth, and then wastewater and sanitation infrastructure. Total analysis purpose is $7 billion when we're literally short $100 billion a year. This is crazy. But I'm glad that
that something is being done about this. But this illustrates why we are there. So ESG, very, very interesting. There's a lot of people who don't think ESG is very good, et cetera. But the fact is that a huge number of financial institutions are using ESG ratings to make investments, and we're not going to be so picky. When Modular Water goes in and helps a company treat its own water, it can then reuse, and the water reuse actually raises that company's ESG rating, and it gets more funding, et cetera. All right, Dan Perone, I see you raised your hand. Please just make a written comment. We generally need to have that. James Wright, I know someone building a mining center and liquid cooling their machines. I'm not sure how that works, but sounds like opportunity. It certainly is. Certainly is. All right, so the ESG story is happening. Now, I talk here about MLPs. Why do I talk about MLPs? Because they were an instrument that was created back in 1981, and the first player, Apache Oil, created basically a basket of energy properties, pipelines, oil wells, gas wells, and packaged them as a way to generate royalties. And they also scored some tax benefits. We are doing the same thing with water. So we call ourselves the Water MLP, which is great, except, well, it doesn't have those energy tax benefits people are trying on Washington. It's not going to happen anytime soon. So what do instead? We are very generous with equity. So you become an equity player. All right, now this is a small thing that occurred, $500,000 in forfeited Russian funds to Estonia for benefit of Ukraine. Again, I'm not making any political statements about this, but it seems to me that this is a way to test the idea of taking the full $300 billion, $200 billion in Europe, $100 billion in the US, and put them to work. If there's not a lot of reaction to it, I believe that it will move to the next stage. However, I think it's very harmful to the US dollar. All right. Consumer debt spiral. Look at those interest payments. Personal interest payments have skyrocketed. They've gone from about 270 billion to about 500 some billion. They've doubled since 2020. This doesn't end well. Governments can forgive themselves their debts, but individuals is very, very hard. So that's a problem. Made a comment here, no matter what happens in Washington with whatever party's in power, the macro trend is toward a vast amount of prosperity here. North America is capable of being totally self-sufficient for resources in a way that other regions of the world are not. This is a very important thing to remember. For all the doom and gloom, we do have the resources. All right. All right. Food costs are back up where they were 3 decades ago. So in 1991, U.S. consumers spent 11.4% of their disposable personal income on food. And now we're back there. So not a good picture. At the time, there'd been an inflationary period in the 70s and food prices were still high. That is still with us. I mean, or it's back anyway. I think that we covered some of this, but this is short and I'm going to go ahead and play it quickly. Here we go.
So I've been doing this since 1998. Fail,
right?
Launch.
Well, you know, I like the part about failing early and failing often, which is kind of my philosophy too. In part, it makes the best of a lot of learning experiences.
Well,
I meant to.
Yeah, but also if you don't make some of those mistakes, you don't learn, you know, and if you, as long as you don't die in the mistake, every once in a while I go, this is it. This is it, Martha, I'm coming.
This is not Call of Duty. You don't get to reset. No, that's the issue.
It's like Gran Turismo in the movie, right? He goes, no, when you crash in this one, it's a real crash. Because you get these kids like, oh, I can do this. Yeah, but you don't count all the times you start over. But, you know, I failed in starting my company this time in 1999. I failed 3 times. I mean, it was like up and crash and burn. And then you're like, okay, it looks really good. It's getting better. Just please send the check. Just please send the check this time.
Jim Mathers, we had his interview last week, and he's interesting because he has an energy network that is very much like water as a service, but it's energy as a service. And he has about 200,000 customers. And we're in talks to basically overlay our network onto his. Very cool guy. And he has a very similar philosophy to ours. Interest costs will top defense and Medicare in 2024. We've already exceeded Medicaid, and now this year we're exceeding defense and we're exceeding Medicare. Within 10 years, they will both blow up, interest and Medicare, at 1.6 trillion. Medicare at least delivers a benefit. Interest but only delivers a benefit to a very small group of powerful bankers, etc. Let's keep on going here. Oh, yes. Marco Rubio warns the Chinese cyber attack will be 100 times worse than the AT&T outage that we had. Your power, your water. And so in this story here, I don't know if you were one of the people who experienced the cell phone outages this week, but Mark Rubio says it's going to be much, much worse once we get a Chinese cyber attack. He's talking about your power, your water, and your bank. Your power, your water, and your bank. Those are the three things. So we're in a pretty important space right now. Felicia Fro. Hello, Felicia. Hospital in Oklahoma had to close operating rooms, basically stop admissions due to contaminated water. That's why you got to control your own water. That's where it's at. Thank you, Felicia. It was a pleasure to hear from you. We've done a couple podcasts. She's had me as a guest a couple times. Always interesting. One last comment. A lot of people compare it to what we're doing with water on demand to what's been done to decentralized electricity. What's interesting is, unlike the energy companies, water districts are not resisting it. Actually, they're delighted. And that's a big, big difference. All right. That takes us out of the X feed. And again, if you really want to enjoy it, please become a follower. We just passed the 1,000 mark. And as you can tell, I pretty much comment on everything. Now, why do I comment on economic matters? It's because the fundamental situation here is that ordinary assets are no longer predictable, and might go up, they might go down. NVIDIA goes up, but NVIDIA can crash, whatever. Who knows? A number of things can happen. But water is a stable asset. It's early. It's not being manipulated yet. And so I take every opportunity to make the comparison, obviously. All right. Let's take a look at what we got next. Okay, so we were on Money Club Mondays again, and this is an update to the very successful show we had with Chris Noggle. And he is a very prominent podcast host. And by the way, this was arranged by our good friends at Philanthro Investors.
So Origin Clear has now distinguished itself as a successful aquatech incubator. The first three projects it's put its hands on, it's now graduating to NASDAQ.
Hey, welcome to Money Club Mondays, February 5th. Today's going to be awesome. We got all kinds of cool new opportunities. So today we got a really cool show ahead of us. We have my friends from Philanthro Investors, and they have a few different companies where they do different investments, but it's always backed with philanthropy. They've done an excellent job. We've been working with them now for a couple of years. They've been coming on the shows. So Riggs and Ken, thanks for being on, guys. How are you?
Thanks for having us.
Absolutely. We're super excited. I guess the last time we got together, we were talking about, and I'll share a screen right now, and Ken and I will be able to comment on this further. But basically, Origin Clear is essentially an incubator. And what we did was we combined everything we developed since 2015 into a company that is now merging with what's called a blank check company. Here's the last big announcement that was made, where we signed a definitive agreement to join with blank check. It's called a blank check company, special purpose acquisition company called Fortune Rise. The actual valuation was actually not 32 million, 72 million. That's been corrected in the Yahoo original, which is a combination of $40 million on the FRLA side in cash and $32 million valuation on the water on demand side. So what's next is a filing called an S4, which is a merger registration with the SEC. We expect that to occur imminently. I can't say exactly when, but the closing date of Q2 remains firm on the business combination. So what are we talking about here? We're basically discussing a brand new thing in water. And those of you who haven't heard about it, water in general in America is in trouble. And what's the solution? Well, we have failing infrastructure with $100 billion gap every year and
$100 billion is still a fair amount of money. I don't know about you, but I think that's a lot of money, and nobody's really allocating it. And what's further, happening, I don't know if you saw this, but Mexico is booming right now because of all the industries that are coming back from China and other offshoring countries to the North American continent. With that comes new needs to both supply energy and water to these factories that are coming back. So very important. Factories now have to do their own pollution management. Funding, again, here's another funding slide, not important to get into. And the utilities can't take care of it themselves. In fact, they're raising rates faster than the rate of inflation of college tuition. That's how bad it is. So water rates and sewage rates are rising much faster than college tuition. Healthcare, right now, it's the number one inflation on the country, but that's not solving the problem. Meanwhile, a lot of people are being thrown off the system, which makes things worse. Far right, you see 56% of water utilities are reporting problems with customer non-payment of bills. Well, when somebody doesn't pay their bill and you throw them off the system, now they're on bottled water. It's even worse. So what's the solution? Well, you remember one thing that's very important to remember. The actual users of our water system are industry and agriculture. 90% of all demand for fresh water and for water treatment is by industry and agriculture. 10% is the people, you and me. We need to flip that around. We need to make it so you and me get proper water treatment. And how's that done? By getting industry and agriculture off the central grid and doing their own water treatment, which, by the way, they like very much. That's where we got into something called water on demand. Let's take a look at that. If we do this private water reuse, which is I've been telling you about, you have all these different sites doing their own water treatment. And this means the central plant is less burdened and it can serve the people. We have 150,000 plus water utilities in this country, some of which have as few as 3,000 customers. And I don't know if you noticed, but there's a huge out-migration trend right now, started with COVID, where people are moving out to the boonies or to different states, and those don't have the same high-grade industrial water treatment that, let's say, LA had, right? All of a sudden, they're in Gainesburg, Florida, and it doesn't have the same resources. And so that's why we got to reduce the load on the central plants by having it happen at the margins. Okay. Benefits to companies, they control the cost. Remember, that's the fastest growing cost of any cost category in America. Number two, they can reuse water. Guess what? That's a savings. Number three, they have independence from utilities. So they don't have to be so dependent on the whims or the politics of the utilities. Private water gives businesses control over their water. All right. Now, what do we need to do that? Three things: technology, expertise, and capital. So for technology, we built a company that basically downsizes those huge water treatment systems to the level of a business. Call them pods. I like to call them pods. And you just drop the pods in, plug them in, and boom, the business is doing its own water treatment. Engineering, we have a fantastic company that's been in business for 25 years that does huge water treatment for power plants, hotel chains, and so forth. The final idea is something we created internally, which is a lot like the way oil and gas is funded. We'll talk about that a little bit more. So water on demand, what happens? Well, let's say that you're currently a business that's getting water treatment from the city. Along comes water on demand and says, hey, why don't you do your own water treatment? Okay, sure. And guess what? You don't have to come up with any capital. Just sign this piece of paper and you'll keep being on the meter. No capital required, with these cool pods that we're talking about and this more than 2 decades of engineering expertise. Okay, so, and I'm going to have an update about that very shortly because we have some new news about it. Quickly covering the fact that water on demand is unique. Why? Because we are pure play in this water as a service concept, and we're the only company in which regular investors can invest. Everything else is either managed capital. Morgan Stanley manages the Seven Seas project. Cambrian is VC funded. And of course, the top left companies are all public companies. that you can invest in, but they're not really pure plays in this water as a service. They're doing the old school stuff, which is the dying business of utilities. This is the patents. I'm not going to spend too much time on this because I do want to spend a bit more time with Ken talking about the new stuff. But basically, modular water is a patented way to deliver water systems in a box. These are some of our current customers, housing developments, et cetera. And it looks just like what you think it would look like in a container, drop in place, and it goes. Also, the same thing with something called pump stations, which I won't get into, but those are important too. And I can play the testimonial videos, but I can just tell you that customers rave about this technology. Modular Water, which we launched in 2018, has grown more than 7 times from 21 to 2023. And Progressive Water, which is this large-scale systems, has done this very similar. 2021 to 2022 is more than double. And as a result, we have a synergy, right? Now, what does that mean? That means that combined, these 3 companies look very interesting. Notice how, bumping along at about $1 million a quarter, and then it more than doubled in 2022, and we're on trend to continue. So that's with the combination of the 3. Water on demand, again, I'm going to cover that. There's some brand new news, so I want to get through these graphs and talk to you about that. Well, what is so cool about us merging with a blank check company? It's the capital, stupid. It's because I'm not calling you guys stupid. I'm using the old saying, it's the economy stupid. In this case, it's the capital stupid. Because with the capital that'll be available from this NASDAQ merger, A, we will be a NASDAQ company, which makes capital raising much, much easier. B, there's the capital, whatever capital remains in the blank check company after the merger, which we don't know, but it'll be some amount which we'll be able to put to use for what? For acquisitions. Acquisitions is the fastest way to grow your business, and water companies are available at a very low PE because of the type of business that they are. And sure enough, here they are. I'm not going to get into some of the assumptions, but we are talking about spending in phase 1 about $10 million between cash and stock and getting a huge bump from that because of the revenue. And as you can see, the green here is how the acquisitions will dramatically help with revenues. Profits take off. Now, literally, look at this. The total revenues without acquisitions, $32 million down there at the bottom right. Well, look at here. Same year with acquisitions, profit exceeds the revenue without acquisition. That's why this is so important. It's highly profitable. Now, one last slide, and I'll get into the new news, and that is all phases, phase 1 and phase 2 by 2027, we have the opportunity to get in excess of $500 million in recognized revenue, which is very exciting. This is me, came from software disruption guy, and here is Kim Berenger, who's on the call with us, co-created Water on Demand with us. And so we are now going to talk about some news that we have from the presentation. So I was just doing a big replay. We are very excited about what's happening with Water on Demand. In that presentation, I sandbagged Water on Demand. Why? Because I didn't have any projects. That is changing. We now have a partnership in the works, and this is so cool. I'm so excited about it. This is the segment called mobile home parks, trailer parks. Those have tremendous pollution problems. So typically, they just have a pond where the poop goes. It's pretty sad. And in multiple states, thousands of these are being upgraded. And it's a highly standardized, super simple wastewater processing system, which we've already pioneered. We already do trailer parks. We know how to do it. We've paid the dues. And we're coming into a partnership where we expect to be able to deliver these units on the capital-free basis. And Stephen, I don't know if you know how bad it is for mobile home parks, but we know one customer that we got to before that we had this Water on Demand. She had to give up half her equity in the mobile home park to pay for the water treatment.
Wow.
That's pretty sad. But here's what it is. These things are highly standardized in Texas. This is happening in Texas, where there's a boom going on in water treatment. So
Texas has special rules for anything under 5,000 gallons a day. You can drop these things in fast. Nobody pays up front. Investors fund it. We return residuals to the investors, and the investors get a huge amount of equity. Ken, tell them a little bit about how that works.
You'll see a self-sustained system that literally is built in a factory. They water it, they test it, and they drop it, and there's like no contracting involved. And this is a freestanding system that can be placed anywhere. And above it, a micro utility network that'll handle all of the contract enforcement, contract management, billing. And of course, out the other side comes this revenue generation. So what investors enter is something fairly close to a master limited partnership type of arrangement. You're not investing, you got one public and another soon to be public company. You're entering actually into the equation as a property participant. You're entering into a fund where there's going to be $20 million worth of equipment placed on mobile home parks. And the per gallon rate is then throwing off revenue. So you're going to receive 25% net profit on that per gallon fee. And that's for the life of the contract. These contracts are right around 20, 25 years. Okay. So the revenue that's thrown off is several times what your initial layout in the equipment is. Now you have the equipment and that survives any equity, exit that you choose to take. So that's going to continue to, crank out inflation indexed income. Water and sewer rates actually outpace college tuition in terms of inflationary impact. So in terms of staying ahead of inflation, if you just stuck with college tuition, you'd be fine, right? But with water and sewer rates, it actually exceeds that. It's on pace to do it with as much real-time change as is energy, but everything is clean. So we believe that the crowd that really wants to promote a greener earth will participate in that. Anyway, getting back to that, you'll collect those revenues, ad infinitum, 20, 25 years. Now, what's interesting is we formulated this idea, and it was really just a concept. We had modular water kicking butt, we had progressive water kicking butt, but then we had this fintech idea of how to make it all happen in the cloud. Now that we've merged these three things, this is a fully functioning, fully operational company ready to go. You're going to be granted, in addition to your 25% net profits, you're going to be, we carved out 10% of water on demand. Now, at the time, again, our thoughts were maybe we'll do a Regulation A, and in 3 or 4 years, it'll be public. So we were extremely generous, thinking it was going to be a long time before we had to, part with that stock. Here we are. We're about to sign an S4, hopefully, right? So 10% of that company is going to go out to the investors. The first 20 million, we're about halfway there. So you'll get a pro rata share of water on demand. Okay. And in a one-on-one conversation, I can break down actually what that's worth today, what's it worth when we merge the two entities, and then based on our growth projections, what that might be looking like in 24 or so months. But 10%, and that's free grant of stock. Okay. So it's worth more than what you invest in the equipment as soon as it hits the market, in theory. And then secondly, you're going to receive a second grant of stock. Now, this is in the parent Origin Clear. Origin Clear has now positioned itself successfully, I might add, as an incubator. We created 3 companies. 2 were from nothing, from the ground, right? PW2 we took on that had a successful 20-year business, but the other 2 were ideas. We took on the brilliant Dan Early and all his designs and his vision, and we financed that and was able to turn it into a multi-million-dollar company. And of course, Water on Demand, which was the fintech that rides above it. So Origin Clear has now distinguished itself as a successful aquatech incubator. The first 3 projects it's put its hands on, it's now graduating to NASDAQ, right?
Well, that will be continued, but I think it's a heck of a story. And I think it's a legendary story myself, because here's what happened. A few weeks ago, I showed you a new article in Water Online that said, whoa, decentralization is the thing, 2024. And I pointed out in that briefing to an article I wrote in 2016 that literally said exactly the same thing 8 years ago, and with much more detail. And of course, back then we were considered nuts, but we paid off on that with a full implementation of decentralized water. Now it's become a thing. There's a new unicorn called Gradient, which I covered also a little while ago, that services the biggest pharma and so forth, food and beverage. For example, PepsiCo has committed to 80% recycling of their processed water. That means decentralized water. So now it's become a thing, and it's being done, and CNN is writing about it and so forth.
And we are right there, positioned perfectly. It felt very lonely in the beginning, but we persisted, built aggressive water, modular water systems. And then starting in 2020, Ken and I started working on this crazy idea of companies not paying for their own water treatment upfront as capital, but paying it as they went. Now, that is not a brand new concept. It's called, in the industry, it's called design, build, own, operate, DBOO, water as a service. And it's been around for a while, for at least a quarter century. But here's the thing. No regular investors have had access to it. So our special sauce is that we do this water as a service and we create an investable asset for regular investors. Okay, well, you say, well, Riggs, yeah, that's accredited investors. It's the 1%, blah, blah, blah. Yeah, I get that, which is why we are on the verge of launching our Regulation A offering again, not as water on demand, because that's in its own merger thing, right? It's can't touch it. It's all frozen and being reviewed by the SEC and so forth. But Origin Clear is going to offer a Regulation A offering to build the funds that it will eventually provide. Well, first of all, the expenses of developing all this, but also the funds that it plans to provide to water on demand in the future. So again, we're being the proud parent, and this will give everyone up an opportunity who's not accredited to invest. Stand by for that. You know where we are? Haha. Yes, indeed. We are at the freewheeling discussion. Come on, gentlemen, join us. And by the way, I see there's a lot of chatter. People have been talking, and let me just, I know that a lot of these questions have been addressed. Ron Williams said, do you have the ear of anyone in Washington? We are not big believers in becoming part of the Washington mess right now. The whole point of what we're doing is that Washington is not allocating water and is bragging about $6 billion when it should be $100 billion. So we just like, you know what? We're the workaround. Right. We're the self-treatment. It's just like, Washington did not drive PCs, from mainframes to PCs. They thought mainframes were wonderful for the longest time. They don't drive decentralization. They're not about that. They like centralization. So if you have a decentralized solution, they go, well, good luck to you, buddy, because...
Right. Well, because centralization allows for control. Control's their thing. That's what they do. And look, the allocation is a help. No one should, kind of crap on it, but it's the equivalent of throwing a deck chair off the Queen Mary. Like we're thinking, okay, I threw off this deck chair. Look at me. This cannot be fixed using the century-old paradigm. There's too much space. There's too much open ground that it would have to be done that way. In a second.
Okay, so these are very good points. Now, a good question was asked by Paul. 25% net profits. Who's going to be monitoring costs and officer bonuses? Very good point. Well, this is why when you're in a NASDAQ company, you have to publish everything, right? Everything is audited. And so we have created models, which, it might be worth next week going through one of the water on demand models and show the overhead and all that stuff is. Officer bonuses are not going to be a factor in water on demand. I don't see that. People will get, paid properly, competitively. Right. Because, for example, I'm not going to be the CEO of both companies forever. If Elon Musk had to give up, being a CEO of Twitter, then I'm going to have to give up being CEO of water on demand. Well, who will be? Well, guess what? We have a very aggressive acquisition program, and that's going to be where we get our execs. So it's going to be a very good carrot for us to say to a water company executive, you can be a CEO. And then I would become the chairman of Water on Demand and remain CEO of Origin Clear. I feel very strongly that Origin Clear remains the creative wellspring of what we do. It's where we get all our, we've developed this amazing marketing engine. AJ's amazing marketing engine. We've been working as a trio and sort of batting things back and forth. Ken's building a machine also. Well, that is going to be used to fund and roll out future companies. And not even necessarily in the water industry, because That's kind of running around with a hand tied behind your back. That's origin clear, and we're going to continue to have a lot of fun with that. But meanwhile, water on demand is going to be staffed up, and it's going to be staffed up from all these acquisitions. And of course, compensation is going to be as per industry standards, enough to attract talent, but not so much that it's basically, enriching ourselves at the expense of the investors. I hope that answers the question. Paul asked another question. The reason I ask about the quality of water is because if the water can be purified to drinkable standards, there could be a big demand in India. People are buying $1 million apartments, yet everyone has a purifying unit installed in their kitchens. A modular system installed by the apartment association could eliminate the need for individual filters. That's very true. So now, having said that, we do have customers where we treat their incoming water, a major premium hotel chain that we are not able yet to disclose. We do all their incoming water. But generally, we focus on the harder job of cleaning the outgoing water. So purification of incoming water is a pretty mature space. It's one that people take for granted, and they do it. But Paul, these are really good ideas. And India is a place I would love to start operating soon. Frankly, I think that the way India is going to get its infrastructure is through distributed systems. That's how it's going.
Right, because there is not the infrastructure that we have here in post World War II America. Paul, I think I've discussed this with you in the past too. Why is India's water bad? Because the industry that's dumping water. So in other words, if you treat it at the upstream problem area, then what comes downstream isn't so bad. You can't solve it at the end of the river, right? You have to solve it at the head of the river, right? That's why decentralized and co-location really is the answer, especially in places that don't yet have the developed infrastructure like India and a lot of parts of South Asia and so on and so forth.
How about Mexico? Mexico's got a terrible problem.
Mexico, right? Same thing.
Non-compliance, right? The only companies that comply with water treatment are the ones that are owned by North American, American and Canadian companies that are required by their own governance.
Right. Do no harm while you're there, right?
Well, they required, in other words, if I'm based in Cincinnati and my governance requires me to maintain good standards, I'm not immune. I have to maintain it in Mexico or Peru, Paraguay, everywhere, because otherwise I'd be using double standards. Right. Now, the native Mexican operators are not there yet. It's improving. AMLO is doing a very good job, I believe, of running that economy, and he's the current president of Mexico. So that's going to improve, and we plan to be part of that. We all have a good friend who's based in Puebla and who is in the business, and we are going to get to that. But very important that we get it right here in the U.S. So that's our focus right now. We're not going to start running around the planet. We're going to do it right here. So AJ, what's the word, my man?
There's so much to touch on. Like, it's funny, Paul, you bring that up, right? Because it's so easy for us to focus internally on the things that affect us, right? Which is, Riggs has talked about this in the past ad nauseum, that so often the conversation gets put into personal water and cleaning incoming water and doing those different types of things because that's what we can relate to internally. And it is an uphill battle a bit to get people to just kind of think about the bigger picture. And often, as Riggs talks about, with Ireland, why is water free in Ireland? Well, it's because they take care of their water supply, right? But it's also an interesting paradigm to be able to look at the state of water around the world, where you look at places, even in Africa, where, again, they don't have a massive centralized system either. And you have entire cities that are basically consuming runoff water from other cities, right? And slums that are consuming runoff water, right? I was watching a documentary recently about a company that basically does like buckets and filters for this whole slum community outside of a city because their only source of water is runoff. So are there applications in personal residential areas around the world? Absolutely. But as Riggs said, we have to focus more on what we can do here to start really balancing these things out, proving out or honestly proving out because it's been proved, but continuing to spread the good word.
Demonstrate.
So we can start to make these things more available throughout the world and get people more interested in decentralizing this across the world. It's a massive uptick. Now, That's that topic. The thing that I'm going to nerd out a little bit on is the whole NVIDIA play. So for those of you that don't know what NVIDIA does, they build graphics cards in graphics technology and have for
gamers.
Well, the more common use is for gamers, but every gamer does know that the real market for any of these chip manufacturers in graphics card and Intel's and everybody's is really the commercial sector. And so NVIDIA has been taking a beating in the gamer space recently because they've been focusing so much on AI and so much on server, business, because they can basically adopt that whole market and ignore the mainstream, consumer market and still be insanely profitable.
Right.
So you really start to look at just how important AI has become to the mainstream markets and to the companies that are fueling this, and what does the tech take to be able to thrive and supply that type of market. And then as we talk about, what do you need to do? You have to cool those chips. And water cooling continues to be the most efficient, both cost and actual production-wise, way to cool chips and to cool facilities, but it does generate the wastewater, which they have to take care of. And wow, I don't know, do we know a company that can do something about that? It's an interesting application.
No idea. I don't know what you're talking about.
Yeah.
Not ringing any bells.
But I mean, there's a lot of, I foresee, and this is going to be my own Nostradamus here, I foresee a lot of smaller server infrastructures popping up, similar to how you see a lot of these, even storage facilities, right? Like you see storage units are popping up all over the place, right? I think that you're going to start to see, just like there was a bunch of people that were doing crypto mining, right? You're going to see a lot of people that are going to start to stand up server networks to help decentralize that whole infrastructure, because so much of it now is centralized in big, massive Google facilities and big, massive Amazon facilities and Microsoft facilities. And there's not a whole lot of other players in that. As people start catching on that it's actually not a terrible thing to be able to put together server networks that are more local, that they can rent out to bigger places, especially in harder to reach areas, they're going to need those same types of things, which opens up whole new markets. So we got to kind of keep an eye on trends in different technology spaces. And I think that that's one that's going to start popping up, because server spaces are not hard to set up. They're not difficult to administrate, but they are a little costly to get going. But they do need water. So I don't know. There's some interesting stuff there. That's a whole fun topic. So I was kind of happy that you talked on that this week, because I was like, ooh, I know something about that. So,
data center in a box. It's a really good idea. And what you would do is productize that, and then people would, lease it, et cetera. I mean, wow, let's not get going with a different complete.
They can truck it in, drop it on the ground.
Exactly.
Yeah.
That's just like this. I heard about this company.
Nah, never heard of it.
Yeah. Well, not to continue to belabor that point, though, but I think people also don't understand, even your regular businesses that aren't these massive server spaces, they have their own internal server networks, right?
Sure.
There's many of these companies there. Some of them are moving to cloud infrastructure, which is basically I'm just paying to host my data somewhere else. But so many of them still have internal server networks that they have to administrate and cool and do all those different types of things. Spending time in a server room in a major company's office is not the best place to be. It's typically hotter than you can stand. And so there's probably another market there that is continuing to emerge, where as people realize that this is something that they can do, get a small system that they could put on site and have that cooling server infrastructure for less cost, and potentially tie into other things, especially in areas where it's more arid and you can use swamp cooling. There's lots of potential for being able to do water reuse. So many cool ideas to be able to take advantage of that. So it's neat.
I love it. Well, okay.
Addressing Paul's comment, Paul, back to your last comment about going out about the franchisee in India and all that stuff.
But we have a partner as
right. But what I was going to say is, what we're doing right now is we're creating we're going to immediately, our door is being kicked down right now. There's an immediate, urgent, desperate need for these to be applied to the corporate world, to the business world. Now, removing the pain point of CapEx expands that dramatically. But we have case studies already, Paul. I don't know if I can name the town in West Virginia, but I think it was shown, right?
Oh, Colwood.
Colwood has they had no water infrastructure. So it reminds you of perhaps someplace in India or someplace in East Asia. And they literally put the box there, and everyone's got clean water now. Everyone's got
3,500
sanitation
homes.
now.
They had zero sanitation. None.
Zero. This was not inadequate sanitation. It was non-existent, which represents, if that could be in Colwood, West Virginia, it sure as heck can be, in some place in the subcontinent or in East Asia where no infrastructure exists. So what we're doing now is we're laying the blueprint, we're laying the foundation to be able to globalize this. And what we will have is, and maybe instead of doing franchises, Riggs and I have talked about creating finance centers, money centers. There'd be one in Singapore, maybe one in New Delhi, or one in, they would essentially fund the systems in the surrounding geographic area. Right? New York would take care of the East Coast stuff. Maybe Miami would take care of the Southeast stuff. So that's an exciting thing, because then asset investors from around the world can participate in this asset play, which, look, there's going to be a real need for a new stable asset. If you read the reports on commercial real estate, it's bad. Now you're hearing about boycotts to New York, where groceries are not going to be brought to New York. If you thought things were bad previously, if that kicks in, things are going to get bad, and people want a different alternative to being able to have steady inflation indexed income. I don't think there's anything more steady and more friendly to the environment than clean water.
Now, let's not talk about India as a would or a could. Well, no, we currently have and have several years, an Indian strategic partner that services Fortune 500 companies in India. It's called Permionics.
Oh, right.
We've been working there for years. They, in fact, have used us, Progressive Water, as a vendor. We have a commercial relationship. And they have done a tremendous amount of these water as a service installations, again, called DBOO, right? Design, build, own, operate. And they have all the procedures in place. They can just do it, right? What do they need? Finance, right? So we bolt on the GM financial function to whatever DBOO operator is out there. It makes us universal. We don't have to always do it our way. Permionics would love to use Modular Water's tech. Don't get me wrong, but that's not the point. The point is capital drives everything.
Sure.
And we did a correct focus by saying, look, we'll do the fintech, and we'll let the maintenance and service be done locally, because that makes us universal, kind of like, Tesla owning all the charging stations and therefore dominating the space.
Once the software of fintech you license that application to anyone using a portable drop and go system, you've now handled, what would you rather be, Mercedes or Mercedes Finance? Yeah. Right? Well, you want to be Mercedes Finance.
Because Mercedes in Germany is falling apart. But that's a whole different story.
But money's money.
Well, money's money. But again, can you talk about the new asset class? And we've teased, a little bit of $H2O and things like that. But you guys have to understand that decentralization as a trend is happening all over the place for good reason, right? Yep. We're seeing the effects of what can happen just to your own currency, especially in America right now. And inflation's crazy. Right. I went and got a bag of groceries, some laundry detergent, and some drinks, and it was $70. And I was like, what? Why is this so expensive?
$70. It sounds like a trip to Starbucks for my wife.
There you go. But still, you take a look at how crucial some of these things are, and how a need. Especially areas like currency need to be decentralized, and why is so much crypto rising and falling and failing? It's because no one understands crypto, right? Like, no one can tell you what Bitcoin really is in terms of layman's terms. But you take something like understanding what water is as an asset and the value of treated water, people can relate to that. People understand that. So there's things in the works that you got to understand that again, Origin Clear as an incubator is still going to continue, as Riggs just said, to be the creative kind of haven and hub for what we can do, not just in the water space, but in other spaces as well.
We'll be technology agnostic.
Absolutely.
Right.
But when you look at the potential of water on demand and what it can do and what it can be beyond just the treating of the water, Paul, I may be ambitious, but I definitely have worldwide aspirations to be able to see as much of this in around the world as possible, right? Desperately, as a race of beings, for us to be able to take care of the planet, take care of ourselves. But it's also something that's vitally important to be able to, continue to advance and see what good we can do. So
I'm going to close with this thought. The previous century, everything was centralized because technology didn't exist to decentralize. The reason decentralization is exploding right now is because the technology exists that allows for it, and it is a more organic application to anything. I think you guys would agree.
yeah.
Oh,
It's more how nature intended it, if nature could build something like this.
we didn't go from mainframe to PCs until we had the chip technology. In fact, what was the pivotal invention that was required for personal computers? It was a clock. It was the clock. Boom. There you go. James Wright, information to help with the machine cooling project. Here's our issue with brand new projects like this. They take 2 years to develop. And right now we are overwhelmed with opportunities. I think I'm going to get some more reports, AJ, that maybe we can get Dan on and discuss some of these case studies that are coming out.
Absolutely.
And there's a fantastic program in regional program called CoStar that we are part of, where we are automatically the designated designer, and we're just getting flooded with these. I'm blown away by the amount of news. So I don't want to throw shade on it. I think it's great, but it's also these cycles start slow and they take forever. Wow.
We now have problems in areas we never had areas.
We never had areas. Yes. Are you working? I'm working. And with that,
Don't make me laugh. It hurts when I laugh.
yeah. Well, yeah. Ken had a very slow speed fall off his bike, and I'm really worried about the bike.
Well,
Really.
the bike will be fine. The ribs will take a little longer.
Amen. Well,
All right, guys.
you got to love it. Fill out your Zoom survey, everyone. We do read them. We appreciate it. No, James, we're not going to give you the CoStar info. That is, okay, let me explain how we work. We work through channel partners, marketing sales organizations. And it is this whole network of recommenders, of objective recommenders. And and what we're going to do now to build business is not go out to the end users, is get more recommenders.
Right.
Because that is the leverage. So I appreciate it.
Yeah, if you're building 50 homes, you're not going to us. Your engineer says, this is what you need.
Right. Yes. Now, we do plan, James, to go to the consulting engineers that you're talking about for the Water as a Service program. But we're starting with the very simple rental program. I'm going way over time. I will discuss this next week. Please, we're at an hour and 11 minutes, and I feel terrible. So with that, next week, I will get into detail on Water on Demand Phase 1, which is already being set up and rolling. It was briefly discussed on the Money Club. We'll give you details. Okay.
Right.
Thank you, James. Thank you, everyone. It's been
Good night, guys.
very good discussion. Keep it up. And we're excited about what's going on. Remember, next week, I plan to have a properly regulated review of the S4 because, again, dotting the I's and,
Lawyers.
well, you got to pay them.
Of
Anyway,
course. And you got to make them earn it. All right.
Good night, everybody.
Good night.
good night.